Corporate financial reports. You hear those words, and maybe your eyes glaze over a bit. They can seem pretty dense, right? Full of jargon.
Yeah, a little intimidating
Yeah,
sometimes.
but here's the thing. They actually hold some really crucial insights. I mean, if you want to be properly informed about business, economics, even just how stuff gets made and sold. Welcome to the deep dive. Today, we're taking a bit of a shortcut. We're diving into the Q1 FY26 unaudited financial results of G M Breweries Ltd.
But maybe not in the way you'd expect.
Exactly. Our goal today isn't really about digging into G M Breweries' specific numbers, mostly because, well, we don't have all the fine details in the docs we're looking at. Instead, it's about understanding the process, the structure of the whole thing.
Right. We want to help you understand, what are these kinds of documents? What do they actually signify? And maybe most importantly, what are the key questions they make you ask about any company's performance?
It's really about becoming a savvier reader of this stuff, getting equipped with the right questions.
So you know what to look for next time.
We've got two main things guiding us today. First, there's an official corporate filing from GM Breweries themselves. It's them announcing these unaudited quarterly results.
Standard procedure, basically.
And second, we have this really comprehensive list. It's basically all the questions an informed observer, like an analyst, would typically ask when they look at a report like this.
A kind of checklist for understanding.
Okay, so let's unpack that official document first. It's dated July 15th, 2025. A direct communication from GM Breweries to the stock exchanges. What exactly is this kind of filing? What jumps out?
Well, the first thing is it's a formal announcement. The company is saying its board of directors has, and I'm quoting here, taken on record the unaudited quarterly financial results for the quarter ended June 30th, 2025.
Okay, taken on record. Sounds official.
It is, but the key word, is unaudited. That's really important. It means these are preliminary figures.
Preliminary, so like not set in stone.
Pretty much. They've been reviewed and approved internally by the company's own board and its audit committee. But they haven't had that full independent check, the comprehensive audit that you usually see with the final annual results.
Ah, okay, so internal review is step one, but the big external audit comes later for the annual stuff.
Mm.
What's the risk then, or the limitation, of looking at these unaudited numbers? Is there a common mistake people make?
That's a good point. The main limitation is simply that they could change. It's usually not massive changes, but a full audit might uncover things that require adjustments.
Okay.
The pitfall is treating them as absolutely final. They give you a strong signal, a good indication of how things are going. But for big decisions, investors typically want to see those fully audited annual reports.
Makes sense. Wait for the final stamp. Now, the document also mentions something specific about GM Breweries itself. It says their operations are confined to only one segment, namely country liquor.
Yeah, that's quite specific.
Very specific. Does operating in just one segment like that, does it make a company seem, I don't know, more vulnerable? Or maybe just really focused? How does an analyst see that?
Well, it's kind of a double-edged sword, isn't it?
How so?
On one hand, being in a single segment can mean they have deep expertise, maybe real dominance in that niche. Super focused strategy.
Right. They know their market inside out.
But the flip side is risk concentration. If that one segment, country liquor in this case, hits a rough patch, maybe regulatory changes, shifting tastes, whatever, there's no other business line to sort of cushion the blow.
Ah, okay. All eggs in one basket, potentially.
Potentially. So understanding that focus right away is pretty critical. And alongside the company's own statement, there's also this limited review report. It's from VP Mehta & Co., Chartered Accountants.
Okay, a limited review report. What does that add to the picture? Is that like a mini audit?
Sort of, but not quite. If we look at the bigger picture, this limited review basically confirms that in their review, nothing jumped out at them suggesting a material misstatement in the financial results.
Material misstatement. So like no huge errors.
Essentially, yes. It's a less intense process than a full audit. It's done under specific professional standards. The document mentions SRE 2410, which guides these kinds of reviews. It offers a level of independent assurance, but it's definitely not the same deep dive as a full audit. It's a check, a review, not the full examination.
Got it. A quick check for major red flags. It's also, just as an aside, kind of fascinating how quick the board meeting was. Says it started 11:30 a.m. on July 15th, finished 12:05 p.m. the same day.
35 minutes.
Yeah, 35 minutes to sign off on the quarterly results. Pretty efficient. You almost wonder if they had lunch waiting, you know?
Huh? Maybe. or just very prepared.
Okay, but look, this formal announcement, it tells us that the results are out, right? It confirms the process,
Hmm.
but it doesn't really tell us the story behind the numbers.
No, not at all. For that, you need more context.
And that's where our second source comes in, this list of questions. It's basically a guide to what an analyst, or anyone really interested, would want to know. It helps decode the actual performance. So when an analyst gets a report like this, where do they even start? What's question number one?
Right. Well, typically you'd start with the general performance and overview. That's the big picture.
Okay. What does that involve?
You'd immediately want to know
Yeah.
what were the key highlights this quarter? Good, bad, ugly. Then, crucially, how does it stack up against the same quarter last year? That year-over-year comparison is vital.
To see the trend.
Exactly. And also, were these results broadly in line with what the market was expecting? Analyst forecasts and so on. Did they meet, beat, or miss expectations? That really sets the stage. Tells you if it's a positive surprise, a disappointment, or just business as usual.
Okay. So highlights year over year and versus expectations. That gives you the initial flavor.
Mm.
Once you've got that, where do you dig in next? The money coming in, I guess.
Precisely. Then you dive into revenue and segment analysis. You need to understand the revenue growth trend. Was it up, down, flat? But more importantly, why? What were the main drivers?
Drivers. Like what?
Well, for G M Breweries, since they're only in country liquor, you'd really want to unpack that segment. Did they sell more volume? Or did the revenue growth come from higher prices? Or both? That volume versus price realization question is key.
Right. Selling more versus charging more. Big difference.
Huge difference. And you'd also ask, what impact did bigger economic things have? Like inflation on consumer spending or the cost of raw materials needed to make the liquor. How did that affect their top line?
Okay, so understanding the why behind the revenue number, it's not just the number itself.
Sure.
What about the other side of the coin, the money going out?
Yep, that leads straight into cost and expense management. How good a job did the company do keeping operating expenses under control?
Were they efficient?
Basically, yeah.
Yeah.
Were there any unusual costs this quarter? Like one-time expenses that made profits look worse than they really are, or maybe some one-off gains that boosted things artificially?
What won't repeat?
Exactly. And looking forward, what are their plans? Are they talking about specific initiatives to optimize costs? Any company can grow revenue, but if costs are running wild, it's not sustainable.
True. Revenue is vanity, profit is sanity.
And cash is reality, as they say. Which brings us nicely to the next bit.
Ah, yes, the bedrock. Balance sheet and cash flow. What are you looking for there?
This is absolutely critical. You'd scrutinize changes in debt levels. Is the company taking on more debt, paying it down? How's their liquidity position? Do they have enough cash on hand to meet short-term needs?
Liquidity, right. Can they pay their bills?
Exactly. And then free cash flow. How much cash did the business actually generate after accounting for capital expenditures? That's the cash that's truly available, for investing in growth, paying dividends, buying back shares, or reducing debt.
The real cash profit, in a way.
In a way, yes. It's often seen as a more reliable measure of health than just net income. And you'd also want to know, what are their plans for major capital expenditures coming up? Or how do they plan to use any significant cash reserves they might have built up? Cash flow tells a huge part of the story.
Okay, so we've got revenue, costs, cash. But it's not just numbers on a page, is it? What about the people running the show?
Absolutely. That's management commentary and strategic outlook. What is management actually saying about the results and the future?
The narrative.
The narrative, exactly. What do they flag as the key risks or headwinds they're facing? What growth strategies are they highlighting? How are they planning to grow the business?
And how are they dealing with challenges?
Crucial point. How are they adapting to regulatory changes, which can be huge in the liquor industry, or maybe tackling supply chain challenges? Their commentary often provides the vital context that makes sense of the numbers.
Right, the why and what next from their perspective. And then, of course, for a lot of people listening, the big question is, how did the market take it?
Yep, that's market reaction and investment perspective. Pretty straightforward, but important. How did the stock market react immediately after the results came out? Did the price jump, fall, stay flat?
What are the pros saying?
Exactly. What are analysts saying about future prospects? Are they upgrading their ratings, downgrading,
Yeah.
maintaining? And maybe most importantly for potential investors, what are the main risks they should be aware of? Things that might not be obvious just from the quarterly numbers.
So the broader investment context. Okay, and finally, this list mentions miscellaneous insights. That sounds like a catch-all.
It kind of is, but it covers important nuances. This category prompts you to think about other factors, like in export revenue significant for this company. Probably not much for country liquor, but maybe for others.
Or things like branding.
Yes. What role does innovation play? Or even just product packaging in driving sales?
Yeah.
Especially in consumer goods like liquor.
Yeah.
And it also asks about broader shifts, like how is consumer behavior changing in their specific market segment? Are people drinking differently? It's about those subtle signals, the other factors that could impact the future.
Wow, okay. It really is like peeling an onion, isn't it? Each set of questions reveals another layer of the company's situation.
That's a good way to put it.
And I can see now, even without the exact G M Breweries numbers in front of us, just knowing these questions helps immensely. Like, if hypothetically we heard their volumes were down, but revenue was up,
You'd immediately think, they must be relying heavily on price increases.
which could be a red flag for the long term, right?
Right.
Even if the headline revenue number looks okay.
Yeah, exactly. It tells you something important about the quality of that revenue growth.
Yeah.
So, yeah, this comprehensive set of questions shows that understanding financials is way more than just looking at a few numbers on a page. It's about the context, the strategy, the outlook, the whole picture.
So let's bring it back. What does this all mean for you, the listener, trying to make sense of business news?
Well, I think this deep dive shows that even when you don't have the full detailed report right there, you can still get significant insight
How so?
by understanding the type of information that comes out in these formal filings, like these unaudited results, and crucially, by knowing what questions you should be asking about the performance. Well, you're just much better equipped.
You can approach any company's results with a more critical eye.
Precisely. A deeper understanding. You're ready to connect the dots when more information does become available. You move from just, seeing the numbers to actually understanding the story they might be telling.
It feels like a shortcut, almost. A way to get genuinely well-informed without drowning in data. It helps you focus on what really matters for a company's health and its future.
That's the idea. Focus on the framework.
So today's deep dive, it wasn't just about GM Breweries specifically. It was really about learning how to pull critical knowledge from these corporate communications, even when the data is dense or maybe just preliminary, like these unaudited results.
Hopefully you feel a bit more confident tackling these kinds of reports now.
Definitely. So here's a final thought for you to chew on as we wrap up. How does knowing what questions to ask about a company's financials actually empower you? Maybe in your own decisions investing, perhaps, or career choices, or even just staying informed about the business world around you.
Something to think about.
Keep exploring, keep asking questions, and keep thinking critically. Thanks for joining us on the Deep Dive.